Good morning, everybody. Welcome to the Flow Show and what looks like the end of summer as we all kick off with lots of stuff going on this morning. Okay, how you doing, mate?
Hey, good morning, Ryan. Good morning, everybody. It looks like the start of the summer here in the UK.
Yeah, of course it is. The kids are going back in 2 days, so yeah, the sun, not cloud in the sky, 28 degrees. Yeah, good to see it at last, even though they couldn't do it for the last 6 weeks while the kids are off. Anyway, enough moaning. How you doing, mate? All right? Navigating this morning, all right?
Yeah, all good, man. All good.
Good stuff.
Right.
Well,
Dollar's doing what I hoped it would do. So I mean, I'm in a pretty good mood.
yeah, that's always a winner if it does what it wants you to do. Right, well, let's crack into it, get through some of the headlines, and then take a good old look at markets. I'm going to kick it off with the data because there's been a ton of data out. Obviously, a US holiday yesterday, so not a lot going on there, but it's also final PMI day for the services sector today. And as you can see, a lot of numbers coming out. There's some good points and bad points. Australia services a little bit higher, 47.8, still in contraction. Over in Japan, we had some household spending data, which doesn't look overly great for July. They're down 2.7 on the month and down 5% on the year, much worse than expected. Services in Japan holding up. The final number there, 54.3, as it was in the flash, confirming the higher reading over last month. Bit of a surprise there for the China services PMI, one of them anyway, the Beijing, 51.8. That seemed to tip a few things off in Asia overnight when that came in lower than expected, and obviously much lower than last month as well. So sort of got the worries about China kicking in there as well. We've had further, I'd say, news worries about financing going over there in the property sector with this China garden mob. They apparently paid out some bond coupons that they'd largely got an extension to pay in. They missed the first round, and then they got to say sort of grace period. They've paid up on those, but they are seeking to extend 8 more bonds by a duration of 3 years. So not out the woods there as yet. Market getting fearful about this country garden as it is about Evergrande, but I don't think it's going to be a problem, much like Evergrande wasn't in the end in terms of global implications. But if the market wants to panic over something, it will panic over something. RBA was out as well, leaving rates unchanged. Nothing really I spotted in the details in the statement, etc. Led with the repetition of the line that some further tightening of monetary policy may be required. Obviously not this month. They say inflation is still too high and will remain so for some time yet. Coming over to the rest of the data before we get into the central banks as well. Spain services moving into contraction, 49.3, so worse than expected there, joining all the other countries who had already edged there anyway. Italy services, again, another one into contraction, was expected to come in at 50.2, came in at 49.8. Over in France, services, these are the final numbers, so worse on the final number, 46 versus the 46.7 flash. Germany as well, that was unchanged, but again, confirming that we are in contraction in all sectors now. The pan-Eurozone number also dipping lower than the flash number, 47.9. UK, that was a bit better. Well, when I say a bit better, it just wasn't as crap. The flash number came in at 48.7. That was expected today. Came in better at 49.5, still in contraction. Services is the biggest component of GDP for the UK, hence why this one's usually more important than the manufacturing number. Coming over to the ECB, and ECB Centino's been out a few times in the last couple of weeks doing his dovish jig. Says there's a risk of doing too much on rates. bit of a repeat of its prior lines, saying that inflation is slowing much faster than it rose. ECB's Lagarde was out as well, not too much, saying we must communicate effectively to anchor expectations. We are also aiming to be more transparent in accounting for our forecast errors. Good luck with that one. ECB's Nagel, a bit of a strong word for the banks, saying it's the ECB's mandate is price stability, not making banks happy, and that they had monetary policy reasons to scrap the interest on reserves and should be open to doing more on reserves. Inflation is still much too high. ECB's Lane, the chief economist, said that the August flash inflation data was welcome, but we need to see that continue. One person who's had enough of ECB hikes is Spanish Deputy PM Calvino, who said we would welcome the end of ECB rate hike aggression. So very panicky, very strong words there about the ECB. Speaking of expectations, as Lagarde did, we had some latest CPI survey data out, and 1 year inflation expectations came in unchanged at 3.4%. Longer term, 3-year expectations rose a pip to 2.4%. So this is the sort of thing that the ECB look at as much as they look at the data. They look at what they see consumers, businesses' expectations for inflation. So still running pretty high at 3.4%, and further out going up as well. Kay, you got anything choice you want to pick out the data or the RBA, anything before move on to the rest of it?
Sorry, no, not really the RBA as such. It's Lowe's last meeting, right? And I think he's talking on Thursday, which will be likely his farewell speech or so. Yeah, it's on Thursday morning for us. I've already noted some more hawkishness in Bullock's tone regularly, and she's going to take over, right? So I don't know whether it's going to mean a lot straight away, whether she's going to start talking a little bit more hawkish, but that is one that perhaps we should just keep in mind for the rest of the RBA. No, I think the hit in the antipodiums that we saw has more to do with China than really the antipodiums themselves. The market is now firmly in the camp of, well, basically all of them being done or sort of being done with the hikes as well, when we look at the expectations. And it's no different for the RBA. So as we have been saying already a number of times, we are back to data watching. The second thing is that we've seen a couple of rounds of relatively positive numbers out of Japan. And now it seems that reality is catching up, and this household spending will not be liked by the Bank of Japan, I reckon. Also, we've heard some of them talk, some of the ex-officials talk, some of the current ones, and they seem to firmly send us to 2024, and which would mean that there's nothing to expect from the Bank of Japan on the next meeting. We may see a bit of wording, perhaps, in preparation of a bit of early speculation. But if you listen to what they say, it's really, it's even slower than a snail's pace, right? And then we have this the 10-year JGB auction coming out overnight, and that went pretty well. They had a bid to cover ratio of over 4, albeit with a bit of a tail, but it does look like the Japanese investors are not really waiting for those yields to go much higher before jumping back into their JGB. So all of that combined makes it feel a bit logic to me that the yen is one that is going to remain under the cush, and I guess we have to start looking at that previous high again, and perhaps why not a move back into the 148s or even the big 150s. So that's really what's standing out for me in the news, and Euro seems to be catching up now with the weaker data. September may be starting for good today, with the US coming in again after their Labor Day, and I guess we will know pretty soon what they want to do with their own currency.
Yeah, very much so. Very much so. I'm not really sure what's going on this morning. We obviously had those risk headlines from China and the data. You know, this could just be coming back from the holidays. A lot of people, kids are back to school now. More people on desks. You know, just a general pickup in activity, re-establishing positions, putting on new ones for the latter part of the year. So, yeah, we'll look at prices in detail in a moment. Just coming over to some other sort of headlines. We are going to be moving into election campaigning very soon, particularly in the US. And the WSJ had a poll out, and 73% of voters said they feel Biden is too old to seek a second term. That's compared with 47% who think that Trump is too old. So there's a larger proportion who think that he isn't. Even 66% of Democrats thought that Biden was too old to continue. How voters view the president? 39%, only 39% hold a favourable view of the president, and on his handling of the job, 57% disapprove on how things are going over there. So, you know, I wouldn't see this as the be all and end all everything, but we're going to be getting lots of polls and things like that just as we move into 2024 and that election year. Same thing's going to happen for the UK as well into the latter part of next year. But we're going to get a lot of these polls, so just keep an eye on it. Probably doesn't have too much market impact now, but the closer we get to the election, the more we might start to see that influencing. But it's always good just to have a little idea of these polls, just to give you a bit of sentiment indication going in.
Right.
Yeah.
On that political front in the US, there's already been some talks now that the Congress is coming back from their holidays. Is that we might be running into another issue with the debt ceiling towards the end of September. So that's another one to bear in mind for September. September is traditionally a pretty hot month. A lot is happening over there. And then the other thing that stood out in the news, we know how they are over there and how bellicose they are over there, but seems that we are setting up for Kim Jong-un and Putin meeting soon to talk about arms deliveries and stuff from North Korea to Russia. And somewhere this may have to do with some of those moves that we've seen overnight as well, in particularly in China also. But because I don't think that they would do it without the agreement of China. Especially not on the North Korean side, right? If she would tell Kim to stay in his box, he would, I reckon. But now it seems that they kind of get the green light for that meeting, which is not going to make the geopolitical situation any better anytime soon.
No, and I saw another headline where they were talking, or potentially talking about them, Russia, China, and North Korea running military drills somewhere, playing with their toys and navies or whatever at some point as well. So, yeah, that's all in the mix. A lot of that going on as well. Funny enough, there's just a headline popped up that tells us suing a Chinese firm over tech secret infringement, according to China state media. So, yeah, geopolitics is something we're going to have to look at. It is a big month. You know, we kick off the central banks. We had the RBA, got the BOC on Wednesday, ECB on the 14th, and then the third week of September is the big week. Fed, BOE, BOJ, Norges, SMB, Riksbank. I think I don't know if Banxico or anyone else is in there. A couple of others, smaller ones. So this is going to be a big month. I think it's going to be a big month because what these central banks do at these meetings is probably going to set us up for the rest of the year in terms of what rates are going to do. Are these banks going to hike there one more time? You know, the Fed, ECB, BOJ, BOE, all potentially have one more hike in the pipe. Not that it will be a big deal if they did hike. then that'll probably be a further confirmation that they are done. But you know, we've had some inflation numbers coming in a bit hotter around the grounds of late. If we get another print like that the next month, well, we might be seeing another hawkish tilt. But I think what we're going to be seeing is a lot of jockeying around the data. You know, the last few weeks we've been trading, and it's really been about just picking the levels, and you can't get married to a trade for more than 5 minutes because if it turns around, you can see that just from that dollar yen chart. You know, we had that break up into the 147s, lasted the proverbial 5 minutes, then we went and broke the support down below. So that was indicative of summer trading. So now we need to see whether we're going to get some trends developing. I think we're going to be ping-ponging between the data in terms of what central banks are going to be doing. Right, well, the last headline I had was that there's been an ongoing issue at Australian LNG plants and stuff. Unions are now going to be holding further strikes starting the 14th of September. So that's still bubbling over in Australia there to do with energy. Same for the US, still got loads of strike action over there. Same with the UK. So there's still potentially wage price demands to be settled and come through the pipe, and that will hit inflation as well. But anyway, that's more for the future. Right, so coming over to prices. So we've had a look at the dollar yen first as we're sitting here. You know, we had this 146.50s area, which has seen a lot of action of late. We did have that break, an extension through it, but it didn't last, came back below straight after its resistance again. Then we had the move to the lows, come back up. It's been resistance through yesterday. A bit like this move, I really would like to see it confirmed. So if we get a move, you know, what is that secondary level here, 146.75, 80-ish, which was already sort of started to build a bit of support, but I want to see this held on a test. If we get that 146.50 hold, then that should give it a springboard for higher up. Maybe we get to the 148s towards 150s. But if not, then if this is just a day of just re-establishing positions and a bit of jockeying around, and we break back under that 146.50 pretty quickly, you know, this is going to be just another shakeout, and then we're back in the ranges and see what we want to do after that. But there is a fair few pairs that are making some moves. As Kay mentioned, just looking at euro dollar, you know, that's looking very sorry for itself at the moment. Let's go into that one. We've had a break of the trend line. Now we need to see if that's going to hold as resistance as well. Had another secondary break under this area, 107.60 is a bit of an on-off level, going back quite some time. Again, need to see it holding. If you're going to believe these breaks, you want to see it holding on retests. If we get that, then we're heading potentially lower down to the 107s. So we've got a few breaks. Kiwi is one I'm still in, and I've been moving my stops about because we've been moving up and down on this trend line. If I can find it, there we go. So we've had this trend line that's been in play for quite some time. I'm still long around the big figure, and I've moved my stop this morning down to 65, so just under this level, just while we're holding it. However, I'm not liking the price action. I didn't want to get faked out because I originally had my stop at 75. I didn't want to find out I get stopped, and then this is just a temporary move, and then we're back up above 59s later on this afternoon or tomorrow. So I'm respecting this trend line for now. Happy to go a bit extra on the stop because you know, I made enough money buying the dips and offloading them up here anyway on the highs. So, but I think if I do get a move up to 59s, and again, I find it's going to hold as resistance and we're not going to get back through there, I might tip out my longs and just keep the sell stops in play just in case we do get a further move down. But it's at the moment, we've had a decent move, but when we run into decent levels, as you can see, the trend line crosses a horizontal line there. We're bouncing off of that for now, not too strongly, but it's holding. So that's what I'm going to base that on. If you're going to go, then break these levels. If you're not, then we may get a reversal back up. Euro sterling, that's a little bit middly once again. Coming off the 86 highs, coming down to the mid 85s, not doing an awful lot. Bit of a bounce this morning. You know, pound's a little bit weaker, which I thought it might be the other way around, given that PMI earlier, but contraction. So this one's still bid on the morning, but not doing an awful lot there. I've been saying it for a while. I don't think we're done with this 85 zone just yet, but it may be the central banks that need to give that another push, depending on what the ECB and the Bank of England do for that one. But as you can see, we're still struggling to make high highs. We're still in a pattern of making lower lows, but this 85 zone is still solid for there. Last one before I hand it over to Cayman. Dollar China, as we've been talking about, has had a pretty stiff bounce. So that's pretty much from Friday coming into the lows down here. I'm still a little bit short. I managed to knock some off around 725s. And I've added back into the position up here one at 730 and a halves. So I'm not playing it too big still. I'm keeping it pretty small. But if this is just a bit of a new month, end of summer type move, then we shouldn't really be breaking above 131, 132s. Sorry, 731, 732s. If we do, then maybe something is changing. But I'm happy to stay on the short side of this one for now. The prior highs and up at 737s will be my marker for whether we are going somewhere new. But I've had enough indication when we had those rate cuts last week and stuff, and the tinkering with the mortgages, that the market took that as sort of risk on. So we actually saw one gaining on those moves. So if they do continue to ease, the market is thinking, right, they're fixing the problems. That should be a positive. But then we get bad data like we did last night, and things change around the proverbial light switch. Kay, do you want to have a grab around?
Sure. Hold on just a sec. Yeah. I'll take it. So, well, first of all, it's something that we've been talking about in our room this morning, where people were saying, like, it's perhaps a bit of divergence starting to get in the market, because the differentials, if you look at the euro versus dollar short term, the differentials haven't really moved much, yet the dollar is much stronger. I think it's each and every pair has its own reason for the dollar being a bit stronger. I think it's, well, mainly a dollar thing, because all the dollar pairs are stronger. So the market is still firmly believing that the US recession is either going to be pushed back, more shallow, or perhaps not even coming, because we've seen Goldman Sachs now moving its expectations to only 15% for the US to get into a recession. I think that's a bit optimistic. I think we may get there, just don't know when, but it's going to be probably the same for everybody in the developed world, at least, that this is going to happen. So what we're seeing today is like after the yo-yo here in the differentials, we are like relatively stable. But then if you look at the euro dollar, that's given up a couple of levels here, which is, I'd say, logic. I've been talking about that on Friday and yesterday as well. I think the European data are a bit more sucky than what's happening across the pond. We've given up here this trend line that people were watching, and us included. It was gradually getting higher. First of all, first it was around 70. Now it's up in the 80s. So this is giving way, but there's another one waiting here, okay? And that is, by the time we get there, likely around 107.30, which is also the bottom side of the wedge. I think that's going to be your make or break, is perhaps a big word, but if we break this today, we may see this extension down into the 106s, because as we have been saying earlier on the show, the US is getting back from their holidays. There's people going to be willing to put on fresh positions, probably. They're going to see that the Commodities are a bit lower, the equities are a bit lower, yes, but the US not doing as badly as the rest. People may be tempted to buy a few more dollars at the start of this month. Don't forget also the seasonals, which usually September is a pretty decent month for the dollar. And add to that some of those geopolitics, which are still not looking very rosy. And the safe haven buyers may look at the dollar in some way or shape to express their worries about geopolitics a little bit more. So I wouldn't be surprised if we at least see a decent test of this. Wouldn't even be surprised if we see a bit of a break below, without even those interest rate differentials going in the way that they should. And I'm going to straight away reply to Horatio there, who was asking, like, could you explain how you use yield differentials? Are they more of a leading indicator or more of a confirmation indicator? Well, you probably heard me talk a lot about those differentials, right? Especially the short term on the EU versus the US. Overlap it with the euro dollar if you can, and you will see how much they move in tandem. It's actually a very not even leading or lagging, but a very actual indicator. You can say it's a very immediate leading indicator because the market has been trading a lot on the yield differentials of late, especially while the central banks were all hiking rates. This is one that perhaps could become a little bit less of a leading indicator once they're all done and hold the rates still. Then we are going to have to look at more of the actual economic data, which will make the difference between a dirty and a cleaner shirt. But overlay the euro dollar, and you will see how close euro dollar is trading to these 2-year differentials between the European rates and the US rates. Okay, Horatio. So I'd say it's somewhere a leading indicator, but it's like an immediate leading indicator. It's like the models are really plugged onto it. And when the yields move, and we know the bond markets have a very big influence on markets globally because it's such a huge and deep market, you will see why this euro dollar is moving in tandem with yield differentials. But we can go a bit up and down on expectations or on data without really having this to move. And as I say, perhaps in the future, when we are going to enter, or perhaps we are already entering it now, this could be a little bit of a less direct indicator, because if all the central banks go into standstill mode and wait and see mode, this could actually start to flatline a little bit. But for the time being, I just wanted to highlight today a bit of a disconnect from the immediate move of the differentials. And I think that's those PMIs, that's the labor report on Friday in the US, which is after a bit of hesitation has finally been taken as a pretty decent report because of the higher participation rate, and despite a bit of a higher how should I say, unemployment rate, which was driven by this participation rate, the overall numbers were still not as bad. So we are still very much trading the soft landing in the US. So that's to bring it back to the euro dollar. I think 107.30 is your next level. Will it go before the States come in? I'm not sure. I don't know. I still like it a little bit lower here, still in that small position from the NFP date. So yeah, I think there is a possibility before we really look back and perhaps correct more. There is a possibility that at the start of September we are going for a bit of a break here and see what happens in the 106s. Sorry, sorry. And short-term sterling, and as I showed yesterday, we had a little bit of a short-term trend line here developing that has given way through 126, 125, 90, 95. Why? I don't really have too much of an idea why, as we've seen, even euro sterling stabilizing, even going up a little bit in the early morning. I don't see why sterling would be weaker than the euro, but a lot has to do probably with liquidity. And then you can take sterling, you can take the Aussie, you can take the Kiwi, and that's all a question about liquidity. The euro can go a little bit slower than other pairs because just of liquidity. If you want to sell 500 million euro dollar, you're going to do it very easily. You want to sell 500 cable, 500 Aussie, it's going probably to take you a bit more time or a bit more pips. So that may just be a factor of liquidity there, because I don't really get why, looking at the data, any other currency would be much weaker than the euro for now. Dollar yen, Ryan already showed it. That 146.5 around here, that is one level. And then we were developing a little bit of a megaphone, and it's broken through there as well, 146.90. Whether that's going to hold is a bit of a fragile one, but it does look like we are going for a retest of the 147.30s. And that then, if that would give way, there's very little to hold it back from a test of 148.80. Depending on the speed, that will then take us back into into the question of are the people at the MOF going to be nervous about this move or not, because it's starting to look a little bit, I'm not going to say uncontrolled or whatever, but it's starting to look a little rapid. You know, we have done nearly 300 points now from the Friday's low. Add another 200-300 into that, or another 150 very quickly into that high 148s. They may start to talk a little bit, because at the same time the yen weighted index is really suffering as we speak. But as I was mentioning earlier on the show, listen to the Japanese officials, listen to them sending us into 2024. The market is not going to expect much for the Bank of Japan on the 21st of September this month. So in the meantime, if the dollar keeps its bid tone, I don't see really what's going to stop it, apart from perhaps a bit of verbal intervention. That for one. Then we have to talk quickly about those metals, because we've seen in the commodities sphere and the metal sphere that we are putting in a little bit of a reversal. We also had this spike on silver that we've seen. But if the rest of the commodities are coming down, and if the dollar is bid, this now rejected, okay? And as people know, I've been floating a little bit on the way up, and now I'm patiently waiting. I said I was going to start to reload in the low 23s, but I want to see what the US is doing with it first, what it's doing with their own dollar, because if they accelerate some purchases of US dollars in this market, this could go back to those mid to low 122s, right? Been in this zone here, yeah, mid to low 22s. Okay, this is definitely a zone where I'm going to just continue to trade my long-term view, by releasing a few on the way up and getting back into them on the way down. So this is one area that I'm going to look at closely. Anyone else want to look at anything? I think Ryan was spot on his Kiwi there on the big levels. Yeah, we have to look at the MEX, because there's still this Mexico currency hedging stuff going on, which sends a bit of shivers through the Mexican market. It's broken above the 17.18 now in the dollar MEX. It is possible, you know, that if the market is really going to get a bit more scared, or if just the dollar is more bid, that we're going to have a look back at the 17.40 in the dollar MEX. For the overall picture to change, we really have to go up into high 17s, okay? But for the short term, we can't exclude a test a bit higher. And despite euro dollar being lower, we are finding it back in the Euromex as well. I'm being very cautious. I'm not involved in this right now, but we entered this this wedge again. There is a possibility we are getting up to 1870s here in this Euromex before reflecting. So this currency hedge is going to probably add a bit of Mexican peso in the market over the month of September. It's probably going to be more affected second half of September, but we know how the market tends to anticipate everything, and we may see a bit of more Mexican peso being on the defensive. Last but not least, and I'm not going to run over what Ryan already said, I think though what broken to the downside is now trying to break to the top side again, but the global picture hasn't really changed much on the dollar yuan. Watch though the level just above 732. It is the 2% band top of the dollar CNY, the onshore CNY. But we've noticed in the past that every time the dollar CNH get up there, the PBOC gets a bit cranky and may be tempted to send their submarines out to sell a bit of dollar China. So watch the level just above here, above this 732, because that's the top of this band right now. Yeah, Gavin, the rand is a bit of a mystery. It's internally over there. They're still struggling with those power cuts, and it seems that there's a lot of issues with buildings in the rand, and they call it being in South Africa, Joburg, with buildings being hijacked and set on fire and stuff like that. It's situation in South Africa is dire, in my opinion. I haven't traded it. I completely missed it here, but it's not looking good over there, right? It's really not looking good over there right now. And that's it for me, Ryan. Back over to you.
Thank you, mate. Let's just grab that back. There we go. See that okay?
Yep.
Yeah, cool. So gold is one I'm looking at. If you haven't seen it, I'll pop it in the chat function at the side. That's the Trade Off UK I do with Michael Brown, and this was one I'm looking at. If today's one of these days where if something's going to happen, you need confirmation of what's going to happen, you know, to see whether these moves are real. We've had a little bit of a pullback in gold. This, for me, this 1930s area is pretty important. If we hold here, you know, if there's no further follow through in the US, no continuation, and we hold here, then we should be going back up probably to 1950s, maybe even higher. So it's all about, today's one of these days you've got to ask the questions. Okay, you've done that move, now what are you going to do? You're going to continue it, or is that it and everything's done and dusted? And I think that goes for a lot of pairs as well. And another thing, Kay mentioned the non-farm payrolls report as well, and that strong participation rate and unemployment rate. I wasn't around Friday to see it all live and whatever, but just looking at it with sort of fresh eyes, it looks positive in terms of, you know, the unemployment rate went up because of the participation rate. But we need to keep an eye on that, because if that participation rate keeps growing, it might suggest that people are struggling for money and they're forced to return to the labour market. That's obviously not a good sign for the consumer, but also it's going to put that negative pressure into the jobs market that the Fed have been waiting for. But not because of job losses, but because of more people coming in and finding a tighter labour market, because there's not enough jobs now to go round. So you're going to see the unemployment rate rising. So it's just a little bit of thing. It might just be a one-off this month, but again, like the CPI, we need to see if that the sort of trend continues, because it's going to look less negative if that participation rate keeps going up and driving the unemployment rate up. So there's always many ways to skin the jobs cat in terms of what the data actually means for things. So that's one of the things I'm going to be looking for moving forward. But yeah, for the rest of the day, don't get too sucked into these moves. Don't see dollar strength and think, yeah, this is going to continue. If you're just turning up to markets, don't pile in thinking you've missed it and, you know, a bit of FOMO, go with it. Wait for the levels to break. further if that's what's going to happen, because if they don't, then you're potentially going to get stuck in at the top, unless you're short the dollar, of course. But if you're looking to long it, you might get stuck at the top and see a reversal. So all down to you Yanks when you come in. I know Brand's hovering around. He's one of the Yanks over there, but the rest will be turning up probably in the next 40-50 minutes, and we'll get a clear idea of what markets want to do. Just looking at what's coming up the rest of the day, not too much. I thought ISM might be today, but it's tomorrow. But what we have got is factory orders, which gives us the durable goods revision. That's about as good as it gets today. I don't really pay much attention to the IBD tip stuff and the CB employment trends index. Not a big one for me, but yeah, just keep an eye on these numbers here, see if those durable goods get flipped around a bit more. We did see some big swings in those big categories, the big ticket items on the first print. That's for that, unless you guys and girls have got any other questions. A bit of a busy one to get back into things with. It's end of summer, so we will continue the rest of the week. We'll have a look at the BOC in greater detail tomorrow. Hope you have a great day. Thanks as always to Kay for popping in, and we'll see you tomorrow. Thanks, mate.